Hi, Mark Anderson here, mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, and I would love the opportunity to earn your business. For today's mortgage rate update, I've got to start off with an apology. I have not been able to keep up with the daily schedule that I've always intended to keep with these mortgage rate update videos. The reason being, this week we've seen rates get back to just about the most favorable levels that we've seen over the last month. Now, this past Friday, I issued a very strong rate lock recommendation. By Monday, I was essentially proven right on that count because rates got worse that day. They remained worse through Tuesday, but by Wednesday, they got back to the same levels that they were at on Friday, basically. Now, these rates are not quite as low as where they got in early March. They're very, very close to that level. But there were a lot of people that, they really wanted to get that low water mark from a rate standpoint, and they were waiting around to see the rates fall back down to where they were in early March. My argument has been fairly consistent for a while now, and it is that I don't necessarily see from a probability standpoint that there's much of a chance at all that we're going to see rates fall to those levels again. We're in a fundamentally different environment right now in terms of what's influencing the market and therefore what's influencing the interest rates. The single most dominant factor right now is the Federal Reserve's mortgage bond buying program. And I've gone over this pattern several times before, but here's how it goes. When they're actively in the market buying bonds throughout the day, that helps to sustain a very healthy bond price level. So today's data shows that we saw bond prices pretty consistently around this 104 level. As soon as they turn off that tap, bond prices fall. When this happens, the big institutional lenders, one after the other, start issuing rate updates where they make their rates worse. Now, these are not dramatically different, but it is definitely the case still that if you get a quote from a lender first thing in the morning and you give them the decision to lock by the afternoon, if the bond prices have swung enough, there is almost certainly going to be, there's a decent chance that the overall terms of that deal are going to be different in the afternoon versus the morning. So I wanted to kind of raise the caution flag again today and to make a recommendation that if you like the deal, lock the deal. I don't see any reason from a fundamental standpoint the rates are going to go any lower than where they're at right now. And in fact, in the argument that rates are going to maybe get worse, there's one piece of data that's very critical here, and that is that the Federal Reserve has announced that they are going to buy less mortgage bond volume. That could mean a couple different things. Worst case scenario, it could be seen as a signal to the bond market that there's going to be less money coming in, and that's going to cause bond prices overall just to fall across the board. And we know what the relationship between bond prices and rates is. Bond prices fall, the mortgage rates tend to go up. So if that's the case, we're going to see worse rates next week. The other potential that I see here is that, we see these nice bond price levels all throughout the day while the Federal Reserve is actively buying bonds. As soon as they turn off, the bond prices fall. So maybe what happens is we still see very favorable bond price levels while they're actively buying, but maybe instead of them turning off the taps at 2, because they're now going to be putting less money in, maybe they turn off the taps at noon. What that's going to do for you as a consumer is it puts you in this position where that perfect rate lock window is just shorter. And I think it's going to make it more difficult to actually lock in at that exact right time to make sure that you're getting the best deal. So along those lines, I wanted to throw out a basic recommendation. I have essentially two kinds of ways of interacting with clients. There are those clients that want to correspond via email. They want to send me their scenario. I may take some time to actually put together a formal quote. Sometimes there's a lag there, just the reality of it. If I've got a stack of responsibilities in front of me, I've got maybe some other clients to lock in. I have to prioritize my activities throughout the day. So there may be a lag. I send out the written quote. They review that written quote, and they maybe call me back the next day. Well, invariably, due to the volatility that I see in the environment right now, invariably the terms are either slightly different or very different by the time that they get back to me. So I'm going to make a blanket recommendation. The other set of clients that I have, and these are the folks that I've had the most success with from a timing standpoint and also from just getting things done and moving forward, I'm going to strongly recommend that if you do text me, which I would love if you do, let's set up a specific time to talk. Because if I can talk with you on the phone in real time, I'm going to open up my interest rate program and we're just going to roll through your scenario in real time. I'll be able to tell you precisely the interest rate for your scenario. I will in real time tally up your exact closing costs based on a title quote that I can pull, based on what our fees are and whether or not there are any lender credits or discount points that are involved in your scenario. If we do all that in real time, it puts me in a position to say, okay, this is what I can do exactly. We can work on your cost versus benefit analysis right there on the phone. I can tell you how much you're going to save per day. I can show you interest savings over longer periods of time. And you could, in theory, make that decision right then. I've found that that is the most efficient way to get the data into your hands, is to actually go through it over the phone. So that's my basic recommendation. I hope that you find the information useful. Please do like the video and subscribe to the channel. I'm going to do my absolute best to get back in the habit of daily updates all throughout next week, in addition to working on some of my educational content. Again, thank you so much for watching. Please do feel free to call or text me at the number below anytime. Have a great weekend.